Payments on account. What are they? How do they work and how do they fit together? Hi, I'm Kimberly Shapcotts, qualified chartered accountant, property investor and entrepreneur. Let's sit down and have a chat. Payments on account. What are they? Where do they come into play? Well, let's start with the very simplest of things, of what are payments on account. So payments on account are an advance payment of your personal income tax, and they get paid on a 6-monthly basis. The payment dates that you need to be aware of are always going to be the 31st of January and the 31st of July. But how do they come about and where do they fit? Now, HMRC require us to pay our income tax on a 6-monthly basis under several requirements, and if you fit those categories, then you'll have to make these payments on a regular basis. HMRC require you to pay your tax in advance unless your tax bill is less than £1,000 when your tax is calculated, or 80% of your tax is paid through employment or another guise where it's deducted at source. So they're not having to collect as much from you. It may be that they've altered your PAYE tax code, so they're actually collecting it through your employment rather than having to pay it separately. So on that basis, they don't need you to be paying payments in advance. If you don't tick either of those boxes and your tax bill is over £1,000 and your income isn't taxed at source, then you are going to fall into this area where you have to be paying payments on account. The payment on account itself is calculated as 50% of the previous year's tax bill. So if in January 2024 you had to pay £3,000 of tax, your payment on account is going to be £1,500 in the January and £1,500 in the July. This £3,000 that you've now paid will go towards your tax bill in the following January. So if your tax bill is greater than £3,000, you'll have some more to pay, and if it's less to pay, then you'll get a refund of that amount, except obviously if you've got another payment on account, the amount you get refunded can be deducted off your payment on account to reduce what you have to pay in that January payment. And then your payment on account for the following year will be based on that tax return that has just been completed, and you'll pay 50% of that balance in the January and 50% in the following July. Now, one thing to probably mention here is, in the first year you go into self-assessment, you have not made any payments on account. So in that first January that you come to make those tax payments for your tax return, you'll have to pay the whole of the tax return that you've just completed. And if your tax return is over the £1,000, you'll also have to pay your 50% upfront for next year, which in effect means in that first year, you're going to have to pay 1.5 times your tax bill before you get into the rhythm of paying 6 monthly in the January and the July. So if you are just coming into self-assessment now, just be warned and just make sure you put a little extra on one side to make sure that you're not caught out. It should be noted that payments on account do not include any capital gains tax that may be payable, and they don't include any student loan payments. So if you are repaying a student loan, you don't have to pay this in advance. That gets calculated and you'll have a bigger bill in January than you do in July because you're having to pay the extra amount each 12 months rather than on a 6-monthly payment plan. HMRC do issue statements each year, just probably around June sort of time, to tell you what your payment on account to pay in July is, and normally towards the end of the year to just confirm what you are needing to pay in January. Obviously, make sure your address is correct with HMRC, and this will then make sure it comes to you. The other way to see what HMRC are showing as your payments on account, you can go onto your online government gateway, and on here you'll be able to see what they are expecting you to pay based on the previous year's tax payments. One thing to note is if you do underpay any payments on account, there is liable interest. Therefore, you will have some additional to pay in interest charges if you don't make the full payment on account that they are expecting. If you do overpay your payment on account, then they will look to refund that money. Sometimes you may need to go online and request the refund, other times it is done automatically for you. Now, the payments on account system is a great way of making sure you're paying for your tax. You've got 6 monthly payments, so you're not finding you're having big hiccups in January each year when you have to pay a large amount. However, your income is likely to be variable. So some years it may go up and some years it may go down. Now, in the years that it goes up, this is not a problem. You do not have to pay anything additional on your payments on account. You'll simply have to pay 50% each 6 months based on the previous year's tax return. So if you have had a year where your tax is $3,000, you'll pay $1,500 in January and $1,500 in July, even if your actual tax bill comes to $4,500, for example. You would simply have to pay that extra $1,500 in the January when the tax return is done. However, in that next payment on account, the next payment on account will now be half of $4,500, which is now moving your payment on account from $1,500 up to $2,250. Now, if your income is moving in an upward direction, that might be the correct figure, and that may be what you need to be paying to make sure that you are covering your tax for future years. However, it may be that this year was a bit of an oddity, and actually normally you pay $3,000, you got some extra income this year, which is why it took it to the $4,500. But now your income's gone back to normal, so in the following year you're expecting your tax bill to go back to around the $3,000 mark. Now, there is a system in place to allow you to reduce your payments on account. So if you're expecting a different tax amount and you'll be paying too much, you can apply to reduce your payment on account so that you don't have to pay that $2,250. You can go, well, actually, I think my payment on account should be $1,500 because that's what we're expecting the tax bill to be. Now, you may ask, when can this be done? Well, you've kind of got two eventualities of when you can do this. You can put this on your personal tax return when it's completed and tell them as part of that process that your payment on account needs to be lower and give the reason for it to be going down, which generally is probably your other income has reduced, which therefore means your tax is going to go down. Alternatively, if you don't know at that point in time, which may happen, so let's go with our example of you've gone from $3,000 to $4,500. We've just paid our payment on account in January for our $2,250 plus our $1,500 extra tax we needed to pay. So now we're sitting with a payment on account of $2,250 for the following year. But now we've got to the end of April. We've now realised, oh, we're going to calculate our tax, and oh, we're not $4,500 this year. We're actually back down at $3,000. So what we can now do is do a reduce your payment on account claim and look at reducing our payment on account from the $2,250 to the $1,500 and put in that application to change it. If you've already overpaid on your first payment on account, then potentially you can reduce the payment on your second payment on account to bring it down so you've made all your appropriate payments on account by the deadline of the 31st of July. If you do subsequently find that the payment on account should have been higher, then there may be interest payable. So I would just advise caution that you're not trying to reduce your payments on account to a level which is inappropriate, because there are additional interest charges. But if you do have a good idea of where you're expecting your income to be, again, there's no reason for you to be paying additional tax for the sake of paying tax. So it's a good way of just managing your tax payments to hopefully be in line with your expectations. The form to complete to do a reduction on your payment on account is an SA 303, or you can go online and do this on your government gateway. But if you're not sure, please do speak to your accountant who'll be able to help with this process to make sure that you're only paying what you need to pay for your personal taxes. Hopefully today you've discovered what payments on account are all about, how it works with your personal tax and when you need to be making these payments. If you have any questions, then please do leave a comment. Please like the video and do subscribe to the channel. And let's make tax less taxing. less taxes.